All right, covering your bases. Procter Gamble might be betting consumers will spend even more as they buy less, but it's hedging its bets with a focus on private label goods as the economy sours. Yahoo Finance's Brian Sozzi spoke with Procter Gamble CEO John Mueller. Here's what he had to say. Take a listen.
We've ensured that we're present in a relevant way in the channels that typically benefit from any kind of a downturn. But, in terms of this being a major descriptor of the environment today, that's not what we're seeing. If you look at private label shares as a proxy of trade down in our categories, they're up very modestly, 0.2 points in the U.S. past 3, 6, and 12 months.
So let's talk about how consumer staples are positioning themselves. Joining us now is Olivia Tong, Raymond James Managing Director and Senior Research Analyst. Good to see you, Olivia. So as we take a deeper dive into P&G's performance this quarter, you have the top and bottom line beat, organic sales really surprising the street here, and then this improved revenue forecast. So as you're trying to sort of get a handle on how the consumer is changing at this point of the year, where do things stand?
Yeah, thanks so much, Rachelle. Great to be here. I agree with you. Excuse me. Organic sales were better than we'd expected. They were up 7% year over year for the quarter, and they raised the full year guide. And what was really interesting is that while volume was still down 3%, that was better than last quarter, and price contributed 10%, which was the same as last quarter. So price is holding, and yet volume is actually, the volume declines that we've been seeing are decelerating. So, and volume was up in the U.S. is something that was really interesting. And a couple of other things, China picked up too. China was up 2%. So you are starting to see that come back. And that has led to the sales upside helped gross margins as well, which led to operating margin improvement as well.
And as we try and decide sort of whether or not P&G is a bellwether here, it does have some of its premium brands on the more expensive side, raising prices year over year 10%, which did offset at least some of what they saw with that 3% loss in volume. But you have an outperform rating on P&G. How are you viewing them in light of the macro pressures and how well positioned they are?
This is a great question, because I think this goes back to a couple of years ago where they did do a lot of things with respect to the portfolio, divesting a couple of brands, really focusing on their 10 core categories, and then also tiering the portfolio a little bit better. So if you think about laundry detergent, you've got Tide Pods at the high end, you've got regular Tide in the middle, and then they have Tide Simply, which is a more gently priced alternative. So as you think about the consumer potentially seeing a little bit greater pull on the wallet and what have you, there are alternatives if they need them. I think the overall performance for P&G also bodes well for the consumer, considering pretty moderate trade down. You mentioned John Mueller, the CEO, saying that private labels only gained about 20 basis points of share, which is pretty de minimis. And that's for a major consumer bellwether. So the consumer seems to be holding quite strong within these categories.
Now, as we look at some of the other consumer product companies that you cover, you have an outperform on Clorox. You also have on Colgate-Palmolive a market perform. So talk about how they would be positioned compared to Procter & Gamble, given their business units.
Sure. I think with respect to Procter versus Colgate, Procter does have a wider portfolio, a lot more brands, 10 categories that they're in. Whereas Colgate is more oral care, pet care, and then some in home and personal as well. So you definitely have a wider range of brands within P&G. The other thing is the exposure to China is much higher at P&G relative to Colgate. So we think that is an area where you should start to see recovery as time progresses, and that'll help there. With respect to Clorox, where we have an outperform, this is very much about the turnaround. Their gross margins were hit pretty dramatically during the pandemic. They are starting to improve again here. A little bit of concern around the top line in their private label exposure, but generally think that their margins should continue to see nice improvement.
We'll definitely continue to track how they stack up. A big thank you there for joining us this morning. Olivia Tong, Raymond James Managing Director and Senior Research Analyst. Thank you for your time and have a great weekend.